If you're looking at a more diversified portfolio that's a little bit more stable and can compound up your capital over time, then that's really the benefit of doing that. On all kind of measures, looking back, equities over and above inflation will give you that return that you need. And that's, they're the best asset class with that long-term time horizon.
Global equity investing opens doors to international markets, diverse economies, and potential returns beyond your local sphere. Expounding upon this topic on Tea Time Tuesday is Ian Fulton, Portfolio Manager for Global Equities at Nikko Asset Management. Hi Ian, welcome to the show. How are you?
Hi Roshan, I'm great, thanks. Great to be here.
Yeah, absolutely, fantastic. Now Ian, let's dive right in. Could you share with us what global equity investing is?
Yeah, sure. I think it's about opportunity, and you kind of mentioned it in the opening remarks there, that it's getting access to the best companies in the best markets and the best industries that can really give you the best opportunities for returns, maybe going beyond what's available in your local market.
Through the exposure to different companies and markets globally, one's portfolio will essentially be diversified. Why is diversification so important?
Yeah, I think it's crucial really to investment, and it's a little bit like not putting all your eggs in one basket. We want to have protection. There's always going to be challenges, things that are difficult. So if we diversify, then if something goes wrong with one investment or one company, then there's a whole other range of things that are going to help offset that. So I think that diversification, whether it's by currency, it's economies, it's different industries, different sizes of companies as well, they can give you that protection and that resilience that you really need to build that long-term store of value in your investment portfolio.
Okay, I think you summed it up beautifully. And it also adds resilience to one's portfolio as well. Now, can you explain how investing in global equity simplifies the process compared to selecting individual stocks globally?
Yeah, I think it's a bit like the hare and the tortoise, that kind of, the hare goes off quickly, and might take a big lead, but over the length of the race, the dependable tortoise is going to come out and win in the end. And investing in single stocks is a little bit like that. You can make big returns in the short term and you get a big lead, and then things can be challenging. New competition comes into an industry, something changes, and things don't pan out quite as well. So in single stock investing is quite risky, but if you're looking at a more diversified portfolio that's a little bit more stable and can compound up your capital over time, then that's really the benefit of doing that.
What are the key trends that suggest that global equity has the potential for long-term growth?
I'm a student of history, and there's about just over 100 years of history that suggests that's been the case, that equities over time, if your time horizon is 10 years or more, so if you're anything up to your 60s, I would argue, your time horizon for investing is still quite long, so 10 years plus. And on all kind of measures, looking back, equities over and above inflation will give you that return that you need. And that's, they're the best asset class with that long-term time horizon. There will be individual years where it's not quite so good, but over that long-term time horizon, they do beat inflation. And, if you think about what age you are and how long you need to invest for, that's going to give you the right answer as to what the correct asset class is for you.
Yeah, Rome wasn't built in a day.
Correct.
Now, Ian, do you by any chance believe in aligning a hobby or a passion with your professional pursuits? And if so, what's your favorite hobby and how do you correlate it with investing in global equity?
Yeah, I'm actually a marathon runner, so I've done maybe five of the major marathons in the last few years. And I think there's a lot of similarities with marathon running and investing. So, marathon running, we're training, we're doing a lot of training, and I think that equates to the research that we do when we're picking companies and selecting stocks and industries and how we think about that. So there's a lot of work done to prepare before you kind of move into the race day and the performance or actually building that portfolio. I think that the other thing, that resilience, we talked about this earlier on, when you're training for a marathon, you're building, resilience in your body. You're getting your muscles used to the fatigue and getting comfortable being uncomfortable. And in investing, if you've got that diversified portfolio with a range of investments, you're building resilience. You can be comfortable being uncomfortable because there's always going to be challenges, but you know that there's enough to offset. So I think, yeah, there's a lot of parallels, and then on race day, it's about taking it as it comes and adapting to the challenges that are in front of you. And I think that's very true for investment as well. So yeah, I think there are many parallels between something like running and investment. Yeah.
Yeah, I can see how those two play hand in hand. Okay, now lastly, before we conclude, do you have any key nuggets of wisdom or one key takeaway that you'd like to share with us based on your experience in this field?
Yeah, I think it's learning from mistakes. And I think and true in any walk of life, you're going to make mistakes, and there are always going to be things that are challenging. It's how you respond to them that really matters, and trying to be objective and to think about where you were maybe wrong in your thinking, or where you misunderstood, or things like that. So I think learning from mistakes, but then not being afraid to get up and make another one, and because that next one might be the best thing that you've ever done. So I think learning from mistakes and just persevering are probably the two main traits that will lead you to be a more successful investor.
Ian, thank you so much for your time. We can chat again soon about this.
Thanks, Roshan.
Great, thanks. To broaden horizons beyond domestic borders is to embrace a world of opportunities. By venturing into global markets, investors unlock diversification and gain access to influential international players, ultimately fostering greater stability within their portfolios. Stay tuned for our next episode, which will feature more insights and analysis. I'm Roshan Gidwani, and you've been watching Tea Time Tuesday. Please like and subscribe for more. See you again.